Funding looks calm. Positioning says otherwise. SUI's taker flow just turned aggressively toward the sell side, while open interest quietly climbed over 15% in a week. That's leverage stacking up somewhere, and it's not obviously bullish. There's a liquidation pocket sitting right under today's candles that the market's already fought over once. Is it about to get tested again? And there's a full trade plan waiting at the end. Entry, stop, target, the one level that kills it. Stick around, because the setup is nothing like what the headlines are saying today. Hey, it's Finance with FM. Today is August 7th, 2026. In this daily pulse, the level flipping SUI's short-term bias, the liquidation trap sitting just under spot, and the exact trade plan, entry, stop, and target computed straight from today's structure. SUI is trading around 67 cents right now, down about 1% on the day after tagging a high near 68 cents and change. Structure is still leaning down on both the 4-hour and daily time frames. Momentum is fading rather than turning, and the derivatives board shows crowded longs into aggressive sell-side taker flow. Call it cautiously bearish, the kind of setup where the crowd is positioned for a bounce that the tape isn't yet confirming. Zooming into today's session, SUI opened near 68.5 cents and immediately gave that back. From there, it chopped sideways in a tight band between roughly 67 and 68 cents for most of the day. That's a market waiting for a catalyst, not committing. Then right into this print, a sharp red candle broke below the 67 cent shelf that had held all session. That's the freshest and most important thing on the chart right now. In plain terms, SUI drifted lower all day and just broke a key short-term floor, widened out to the 4-hour, and the picture doesn't improve much. SUI's been carving a clean descending channel since it topped out near 78 cents in late July. Lower highs, lower lows, textbook. Right now, price is hugging the bottom rail of that channel, not the top. Every attempt to rally back toward the middle of the range over the past week has been met with sellers stepping in early. Until that channel breaks, the 4-hour trend is simply down, and today's candles are just the latest leg of it. In plain terms, the medium-term trend is still falling, and price sits near the bottom of it. On the daily, the bigger story is a market that topped near $1.42 back in May and has been grinding lower ever since, with a brief squeeze attempt in July that also failed. SUI's now sandwiched resistance from a descending channel overhead and a support shelf near 65 cents underneath, the same shelf that held in June. Today's price sits basically right on top of that support/channel confluence. That makes this a genuine decision zone, not just noise. In plain terms, SUI sits at a make or break zone in a longer downtrend. Momentum-wise, the daily RSI sits at 37. That's neutral territory. It's not screaming oversold the way it was back in late January or early June when SUI actually bottomed. What matters more is the shape. RSI peaked in the mid-50s in July and has been rolling over since, matching the price action. Translation, sellers still have room to push before this gets stretched enough to attract dip buyers on momentum alone. In plain terms, momentum is weakening but hasn't hit an extreme yet. The MACD backs up what RSI is hinting at. The MACD line has crossed below its signal line, and the histogram has flipped negative, both classic markers that momentum has shifted back to the sell side. Look at the chart, and you'll notice this exact cross under happened right before the slide into February and again before the drop in late June. It's not a guarantee of a repeat, but it's the same fingerprint, and that's worth respecting. In plain terms, the momentum indicator is confirming sellers are back in control. Key numbers to keep on your radar. Spot is trading around 67 cents. There's a heavy bid wall stacked at 66 cents that's acting as the market's floor, and a big ask wall at 72 cents capping the top. In between, recent liquidation clusters sit at 68.05, 67.38, and 69.17, with 68.05 the heaviest of the bunch. Below spot, another liquidation pocket sits near 66.93. Further down, the June support shelf at 65.14 is the bigger structural floor if this breaks. Here's the tension in this market. Funding is barely positive, near neutral, but Open interest has climbed over 15% in the past week. That's fresh leverage entering, not exiting. Both retail and top trader accounts are net long, roughly 2 to 1, so there's no easy fade there. But taker flow tells a different story. Sell orders are outpacing buys, aggressive selling into a long skewed book. Add a Coinbase price that's trading at a discount to Binance, meaning US spot demand is soft right now, not supportive. Crowded longs plus aggressive selling plus soft US demand is a setup that favors a shakeout, not a squeeze. Positioning Binance, retail accounts are net long, 2.01, while top traders are net long, 2.27. They're aligned, so positioning gives no edge fade right now. Funding is longs paying, crowded longs, squeeze down fuel, it's 9% APR. Coinbase Premium, US institutional spot demand proxy. Coinbase is trading minus 0.045% versus Binance, US side selling, Coinbase discount, American supply pressure. A persistent positive premium is the fingerprint of US spot/ETF buying. A discount means American holders are the sellers. Liquidation magnet, leverage map. With mark at 1, dense long liquidation clusters sit near 1, 25, and 1 50x below. Short liquidation clusters near 1 and 1 above. Funding leans the pressure downside. Longs crowded paying. Long liquidations below are the magnet. Price hunts the heavier pool of stops, so treat the nearest cluster on that side as a target, not support resistance. Liquidation levels, SUI, last 14 days of realized liquidations by price. The heaviest flush zones above spot are 0.6805, $3.4 million, 0.6738, $1.2 million, 0.6917, $1.0 million, and below spot 0.6693, $938,000. The densest single zone is 0.6805. These are the prices where leverage has actually been cleared out recently, so they mark levels the market already fought over rather than levels it is aiming at. Today's headlines lean risk off for crypto broadly. The Clarity Act vote slipping to September keeps regulatory clarity, the thing markets have been asking for all year, out of reach a little longer, and that kind of delay usually keeps risk premium elevated across the board. XRP leading today's major cap losses tells you this isn't a SUI only story, it's sector-wide caution. Combine that backdrop with SUI's own crowded long aggressive seller derivatives picture, and you get a market that's possibly primed for further downside testing rather than an immediate bounce. Here's the computed setup. This is a short triggered on a move up into 67.66 cents. Stop loss sits at 68.73 cents. A 4-hour close above that level fully invalidates the trade, no exceptions. A target sits down at 64.98 cents. That's a risk to reward of 1 to 2.5, meeting the desk's minimum bar before this setup even gets considered. One serious word before you touch this level. This is education and market commentary, not financial advice, and nobody here knows your situation. Any setup can fail. The invalidation level is there because it will get hit some days. Never trade money you cannot afford to lose. Always set your stop loss size small and do your own research. Quick recap. The intraday floor just cracked. The bigger 4-hour and daily trends are both still pointed down, and both RSI and MACD confirm sellers have the momentum edge without being stretched yet. So was the quiet funding rate hiding a trap? Yes. Crowded longs into aggressive sell side flow is exactly the kind of setup that catches the crowd leaning the wrong way. Screenshot line, quiet funding, loud positioning. One word in the comments, long or short from here. Drop it below, like, comment, subscribe, and stick with the video on your screen right now, because the full Elliott wave on-chain and cycle breakdown on SUI drops in this week's flagship deep dive link below.